Good afternoon and welcome to International Investing in 3 Easy Steps. So today really what I'd like you to walk away with is an action plan of how to invest internationally. And I know this is something that many people are interested in, but are often uncertain and fearful of how to go about it. So at the end of this, you will be able to invest internationally, and we will also send you these slides at the end so that you can see step by step exactly what you need to do. So today is going to be very interactive. So you'll see there is a link below, basically the video, and from that link you can ask questions and answers. We'll be doing a few live polls, and at the end of the session we will come back to the questions and answers. So please, this is designed to be interactive, and we'd love to hear your input and feedback. At the end we will also do a very short assessment where you can give us feedback. So today I'm going to use Simon Sinek's Golden Circle to talk about international investing, and we're going to start with the center of that, which is the why. Why exactly do you want to invest internationally? And there will be different reasons for different people. And the reason that's important is because it determines which type of international investment is going to be right for you. And that's what we will cover in the what. What are the different international investments? And then we'll close off with the how. So how exactly do you go about this practically? So this is a picture of my parents. It was actually taken at my wedding a few weeks ago. And they're actually the reason I'm here today presenting to you. So a few months ago, my dad, I'm going to say retired because I think he's working more than he ever has. But effectively, despite having a daughter in financial services, I tried to bring him up, but he was very uncompliant. And so he had very little in the way of formal retirement savings. So him and his 3 partners sold their business, and from that money they received from the sale, my parents need to live off that money basically for the rest of their lives. And the reason it's relevant is I'm going to bring the story in as we go, because it makes it a little bit more practical and it gives you an example of how different people actually execute international investments. So let's begin with the why. And before we can actually unpack why people want to invest internationally, we need to be on the same page as to what is an international investment. So there's shares listed on the Johannesburg Stock Exchange, which are considered South African shares. But what's quite interesting, actually, if you look at the 40 biggest companies there, more than 60% of their earnings actually come from international sources. So despite the fact that they're listed in South Africa, they actually have a fair amount of international earnings. And I've put some examples there. So got the controversial Steinhoff, which I'm sure we've all seen a lot in the media in the last few years. We've got Naspers. So for example, they have Tencent, which is a Chinese technology company. So you would have heard quite a lot about Tencent. It's often spoken about when they talk about Naspers. And then there's Richemont, which is luxury brand. So there's many other examples. But today, we're really focusing on that second block, which is actually international shares and other investments, not just shares, that you'd purchase outside of South Africa. So you would take your rands and you would convert it to the relevant currency, dollar for example, in this example of the New York Stock Exchange, and you would go and purchase these investments. So some examples are Facebook, which you'll all be familiar with, Apple, Alibaba. So when we talk to international today, that is what we are going to refer to. So here we're talking about why do you want to invest internationally? And often you hear in conversation, people talk about this quite loosely as in, I'm concerned about political risk, or I'm concerned about the country. But often it's not very clear the exact reasons. It's things they've heard before. And it was quite interesting. I've had a lot of discussions with my dad over the last few months, and to understand, why he wants to invest offshore and why his partners want to. So let's take diversification, for example. South Africa, if you had to draw a map and you had to represent it by the size of the economy, South Africa is less than 0.5% of the world economy. So that's a really, really small basket to fit all your eggs into. And so many people have this idea of, I don't want to be so concentrated in a very, very small country, and I want to spread those investments across multiple countries across the world. Another reason is people are concerned about the long term, where the rand is going to be, and that it's going to depreciate, and that's going to limit their future options potentially. So that's another reason why people tend to invest internationally. And then the third one, it's a little bit more vague, but people have this notion of, I feel like my money's safer out of the country in terms of political risk, or in terms of people being able to access that money. And the other part of that is also people want to send money outside of South Africa. For example, if their children maybe are going to go to university there, or in the case of my dad's one partner, all their children are overseas and they're looking at immigrating. So they want to be able to access the money outside of South Africa. So there's various reasons why people want to access it out of SA. But those are the three main reasons. There's obviously a host of other reasons, but I think it's important to give it some thought and be clear on what is your most important reason. And this brings us to our first poll, which I will show you the results on the screen, so it will be interactive. But if you can just view the link below the presentation, if you can click on that, it will open a new tab where you can fill in the poll, and the video will continue to be on the tab you were on, so you can just toggle back to it once you've completed it. But if you can tell us what your primary reason is for considering international investments, or if you already have international investments, why you have chosen to do so. And so the options is A, diversification. So that was, I don't want all my eggs in one basket. B is rand depreciation. So I'm concerned about the long term, where the rand is going to go. The third one is I want to move my money outside of South Africa so I can access it there. And then you might have other reasons. So that's option D. So we're just going to wait for the results to come in, and then we'll show it. I see already there's a few people who have completed it. And I know many of you might have more than one reason, but if you can select your main reason, your primary reason, and we will share that with you shortly. I was going to say, I don't want to give away anything, but I can see the results coming through live, so I don't want to influence any of your decisions. But they are changing. We've got a clear contender so far. I see we've already got almost 40 people who've completed it. So we'll allow a little bit more time. So we've got over 60 people now who've completed the poll. Okay, so we're going to wrap it up. Last few seconds to fill that in. Okay, so we've got almost 90 people. We've just ticked over 90 people who've completed that. And the clear outcome here is diversification. So the majority of people, it was almost 60%, have said that their main reason for wanting to invest internationally is diversification. And then, very interestingly, closely tied is actually rand depreciation and wanting to move money outside of South Africa at around 20%. So that was completed by now just over 100 people, but diversification is the clear winner for that. So I know there's a few more people still completing, but I think we can continue. So the next area we would like to cover is the what. And the what actually talks to, there's two main types of international investments. There are obviously variations of that, but we're going to keep it simple for today. And we're going to talk to option 1 and option 2. So option 1 is, and I know this sounds a bit counterintuitive, I will unpack it now, is being able to access these in rands in South Africa, meaning I don't have to go through the trouble of going to get the bank, get my Forex done. We had quite a lot of feedback actually on Twitter. It was very interesting on this topic prior to the event. And many people were saying, the fees are excessive or there's minimums and so forth. So this is a simple way to access it without you having to do the Forex. So effectively, you're using the offshore limits of an organization like Nedgroup, who will take care of that aspect of things for you. Then option 2 is I would physically go and take my rands and convert it into another currency, so dollars or yen or pounds, and I would go and buy this international investment or investments outside of South Africa. So talking to the actual reasons why people want to invest, and we saw diversification was the clear winner, both of these options will tick that box. So we saw that about 60% of people today said that diversification was by far their most important reason. And the reason I say it ticks that box in both cases, even with option 1, an organization like ourselves would literally go and take that money, convert it to the various foreign currencies, and go buy the exact same investments that you can buy with option 2. So both options tick that box. Then in terms of currency depreciation, again, both will give you protection against the currency long term. The rands, the reason I say that rands still gives you that protection is because although you are putting the money in rands and taking it out in rands, that is still invested in foreign currency. So you are still going to get growth on that money if the rand depreciates. So the main difference between these two options is really how you access the money. And the first one you cannot access out of South Africa. You would have to first get the rands and then take it out of SA. So if that is your main reason, then option 1 might not be so attractive for you. Whereas option 2, you can literally, in that example I gave for my dad's partner, if he decided to emigrate to be with his children who are overseas, he could then directly access that money overseas. So if that is your main reason, then option 2 might be something you want to consider more than option 1. But I'll cover that a little bit later, the exact details. So there's actually 2 different subtypes of option 1, and you can see the first one is grayed out because we're not going to really talk to that. I'm just going to mention it briefly. And that is that most of you actually are invested in a fund like this. So if you look at your retirement annuity, if you have a company pension fund or provident fund that you contribute to, most likely 30% of that money in your retirement fund is actually invested internationally, even though you're not aware of it. So there are funds like that. I've given just 2 examples here, which is the Nedgroup Investments Core Diversified Fund and the Nedgroup Investments Balanced Fund. The main one I want to focus on is the second one, which is basically called a feeder fund. And we'll unpack exactly what a feeder fund is, but effectively, this is fully invested offshore, but from your perspective, you can access it in rands in South Africa without having to do the Forex aspect. And you'll see I've highlighted here, it has the word feeder in the actual fund name. So here's an example, Nedgroup Investments Core Global Feeder Fund. And the reason that's relevant is because if I go to option 2, which is investments accessed outside of SA, I've given the same example and you'll see the first fund name is the same, but it doesn't have the word feeder in it. And so option 2, you're also fully invested offshore. The difference is you can access this outside of SA. So here's an analogy. In fact, I actually got a coffee just before the session. When you get a takeaway cup of coffee, you can choose to have a coffee sleeve or coffee collar on it or not. And that's effectively what a feeder fund is. It's the exact same cup and contents. It just allows you to access it in SA. So if you take that example of Facebook and Alibaba and Apple, I have the exact same investments in it. It's just the one I access in South Africa. So we've covered briefly how these 2 options compare in terms of the reasons why. But there's a little bit more detail to that. And those are simplicity. So if I'm accessing in South Africa, it's simpler in the sense that I just hand over my rands and that company will go and do the work in terms of converting it to the relevant currency. I can make monthly contributions, I can make monthly withdrawals, so I can do debit orders. the minimums are fairly low, so I can contribute from 500 Rand a month or a 10,000 Rand initial lump sum. So you can see it's very easy to interact. The international fund that you access outside of SA is a little bit more complex, but I don't want that to put you off, because I think as soon as people hear that, they think, oh, that's too difficult. But we're going to unpack exactly how you access it, and we are here to help you. So we're going to give you contact details. We're going to give you all the steps in this presentation after the session. So if that is right for you, please don't let that stop you. We are here to help. And when I say it's complex, it's a bit more complex, but it's not that difficult. The second thing is you can't do a monthly debit order because of the South African Reserve Bank and the requirements to get the money out the country. You can't set up, for example, I want to do 1,000 Rand a month debit order. You would need to do it as transaction by transaction. Similarly, you can't set up a monthly withdrawal. And then you can also see the minimums are a little bit higher. So for the initial investment, it's depending on the currency, typically around $4,000, pounds, euros. So call it roughly 60,000 Rand to start with. So the key differences is really this trade-off you have between something that's simpler, something that has lower minimums, but can't be accessed outside of SA versus an option that can. And that's really the trade-off you need to think about. There is also a little bit of a tax difference in terms of when you actually sell your investments. So in the first column, the feeder fund, your capital gains tax will be on the growth in the foreign currency. Plus, if the Rand is depreciated, you will also pay capital gains tax on that. Whereas on the international fund, you're only paying capital gains tax on the growth in the foreign currency. So if the Rand does depreciate, I'm not saying that, I'm not predicting it's going to, but if it does depreciate, your capital gains tax is actually less in the international fund. So those are options. So to bring it back to something more practical, because I know that's very theoretical. So to bring it back to my parents, as I said, this money that from the sale is their life savings. They basically need to live off this. This is their income they're going to need for the rest of their retirement. So they had two needs. The one was, I need to make these monthly withdrawals from it. And as you saw, the international fund is not really conducive to that. But then they also had this concept of, I would like my money accessed outside of South Africa. So actually how we accommodated that was we did a little bit of both. So the income they're going to need for the next few years, we put into the feeder fund, option 1. So that's very easy. They can set up regular amounts being paid every month to them, and they can live off that. And the balance they put internationally. So you can also do a combination. It doesn't have to be either or. The other case that I want to talk about is actually something I experienced. Is initially when I started working, I didn't have, 60,000 Rand lying around just to invest. You're still accumulating money and building up money. And so what I actually did is I used the feeder fund, and I built up money in the feeder fund until I had sufficient. Now you can end up paying capital gains tax, but then I sold out of the feeder fund to invest it offshore. So those are just some practical examples to bring it home of how you can set that up. So we're going to go to another live poll. And again, if you haven't already got it open in the tab, there's a link at the bottom below the presentation. If you already have it open in the other tab, you can just go to the other tab. And so this is really, how are you planning on setting up your international investments? Or if you already have international investments, how have you set it up? Have you set it up as option A, which is a feeder fund which you can access in South Africa in rands? Have you set it up as an international fund, which you've actually taken money outside of SA and you can access it out of SA? Or maybe you've done a combination thereof, as the example I gave in my dad's case, or you're really not sure. So we're just going to wait for those results to start coming in. So I think there might be a problem with the voting. So I'm not sure if you're trying to vote and it's not available. Just seeing if we can sort that out. If we can't, let's just see. Okay, it sounds like it's been sorted. So if you tried to vote and you couldn't, maybe just give it a try again. Okay, I see the results are starting to come in. Sure, this looks like a close tie so far. See, we've got almost 100 people who voted already. Sure, exact. These two are very, very close. Okay, so basically closely tied is most people have selected option A, which is a feeder fund accessible in South Africa. So that is the simpler, easier one to set up that we spoke about. And that's at 38% have selected that, and very, very closely followed by that is a combination of A and B, meaning I've got some in an international fund and some accessible in SA, and that's at about 36%, so very, very closely tied. And then we see about 20% of people have got an international fund which is accessible outside of SA. So that's very interesting results. I'm surprised that so many people actually have done a combination, but it does make sense. As I said, there's different needs that the two address. So the last section we're going to cover is really the key walkaway from the session, and that is, how do I go about doing this? Now, obviously the how has to be applicable to a particular company, but there are a lot of principles in this that you could apply generically. So this section is specific to Nedgroup Investments, but you'll see a lot of the takeaways are generally applicable. So before we get into exactly, I'm ready to jump on the website. I hope you're all excited to jump on and do your international investments. But before we get there, we spoke about the why. And what you need to decide on is, which option are you going for? Are you going for the feeder fund, which is accessed in SA? Are you going for a fund outside of SA, or are you going to do a bit of both? And the reason that's important is the South African Reserve Bank has certain requirements in terms of, if you are going to do the investment outside of South Africa, if you take more than R1 million outside of South Africa in a calendar year, so from January to December, you will need to apply. I haven't put all the details in here, but it is in the appendix in the presentation we're going to send out. So if you need more info, it is in there, or you're welcome to contact us. And when I say outside of South Africa, for those who can travel, if you can travel with COVID and get out of South Africa, and you take, let's say you're going to 200,000 extravagant holiday, and you take 200,000 out, you've only got 800,000 left. So it's not just specific to your investments, it's any money you're taking out of the country. And then the last aspect of first things first is you need to decide exactly which fund. So earlier I gave that example of Nedgroup Investments Core Global Fund or Core Global Feeder Fund. So which specific fund do I want to invest in? So once you've gone through those three things, then you are ready to actually follow the steps that are coming shortly. And then I've given you another little tax tip here, which is there's two variations of a fund, and basically it's called an accumulating fund or a roll-up fund. So roll-up, I quite like, it's descriptive in the sense that there's no distributions, it's all rolled up, so you won't be getting income payouts or dividend payouts. It automatically goes back into the fund, which means you don't pay income tax as things currently stand on those distributions. So income tax, we know, is higher than capital gains tax, depending on your marginal tax rate. So that's just something to look out for, whether the fund is accumulating, or what they'll call it is the opposite, is distributing, meaning it is paying out that income. So that's just a tax tip when looking at the different options. Okay, so the actual how-to, which is, as I said, promised at the start, you're going to walk away with actually being able to action this. So this is the high-level overview. If you are going with the feeder fund option, the option on the left, basically it's going to take you less than 10 minutes. It's very quick, it's very easy. I'll show you where to go, and you just need a digital copy of your ID. So all of that FICA is done electronically, and it's very quick and easy. If you're going the international fund route, and as I said, a lot of these principles are generally applicable, you do require physical copies of the documents. So what I mean by that is you'll need your original application you filled in. You will need the actual certified physical copy of your ID, proof of address, and that you can send to us electronically. I'll give you the details shortly. We will check it for you. Once it's all been checked, then you can send us the physicals in South Africa, and we will send it to the Isle of Man and courier to them. So we've tried to make it as simple as it can be within the requirements of an international fund. And then you would also just need to send us the proof of payment. So to start with, for option 1, the feeder fund, you would go to our website, which is www.nedgroupinvestments.com. If you see on the left there's an Invest with Us in the top tab, and you would click on Invest Locally, and then basically it would ask you to upload your ID and a little bit of info. And then, as I said, within about 10 minutes you can be invested. So what time, if you leave the session shortly before 4 o'clock, you could have an investment internationally. Then the second option, also for the feeder fund, is if you are a Nedbank client, you can go into the Nedbank Money app, and you can see on the left screen there, you can click on the more, the 3 dots at the bottom, and then it will bring up the next screen, which you can then click on apply, and you can look for unit trust investments. And again, you can do that within a few minutes. So as you can see, the feeder fund, very, very simple to make an investment. For option 2, again, jumping ahead here. If you do need help, or you have any questions, anything, we are here to help. This is actually Amina, one of the ladies who runs a team in our client services, but we really, really want to assist you with this. So please, if you have questions or need help with the application, or you get stuck or anything, here's our contact details. You can either give us a call or you can send us an email, and we will be more than happy to help you. So now I can jump ahead. For the actual international fund that you access outside of SA, again, you go to our website, www.nedgroupinvestments.com. Then if you scroll all the way to the bottom, you'll see in the bottom right corner, it will have, most likely for you, it will say South Africa, but it could have other, it could have Switzerland. So if you click on that, it will take you to another screen. And so make sure that other is selected, because you want funds that are available outside of South Africa. And you will come to a page that looks like this. And again, you click Invest with Us. This time you will go to find a form, because as I said, everything is physical copies. So that's really the key details. If you have any questions, again, if you need more information, if you want somebody to help you through the process, or anything really, please, again, just contact us. There is also a number there that is toll-free in South Africa, so that you won't have to pay international call rates and rack up your phone bill. And we also have a really, really great help desk that's very quick and responsive. And that photo there is of Simon, who is in our Isle of Man team, who is there also to assist along with his team members. So to conclude, we spoke about the 3 aspects of the golden circle. We spoke about the why. As we saw, for most people, their why is actually diversification. That's the reason why they want to invest offshore. But just give it some thought. Sometimes the reason we think, or that pops to mind, isn't the actual reason. So it's important. It is a critical decision. So give it some thought as to what your why is, and that can be different from, family members or friends. It's not necessarily going to be the same. And once you're clear on that, think about which of those investments is right for you. Is it a South African accessed fund? Is it offshore? Is it a combination? As we saw, many people, in fact, actually had the combination. I was actually quite surprised by that result. And then take action. So what I mean by that is, it might not be investing. It might be getting more information. It might be, if you have an advisor, meeting with your advisor, whatever it is. And I'd really like to encourage you. So we have a behavioral economist in Nedgroup, and she calls it the action-intention gap. So we all have great intentions, and I think we watch a lot of these things, we get a lot of info, but often the action afterwards is missing. So I just want to encourage you to maybe write down one action you're going to take based on this, and actually do it. Maybe commit to a timeline of when you're going to do that. So that's all from me, but we are going to take questions and answers now, if there are any. They will come up shortly. And then right at the end as well, there will be a short feedback. It will take less than a minute, and we'd love to get your feedback on that. Okay, so let's see what questions we have. So one of the questions on the screen here is, how easy is it to bring money back? So you would have to fill in a form. You would have to convert that back from a foreign currency. Let's say you did a US dollar investment. You would have to bring that back. It would need to be converted to rands. It's not that complicated. When you reach that point, when you want to bring it back, you can contact that help desk, that email that I brought up, and they will assist you with that. So it's really not difficult to bring it back. The trickier part is if your tax affairs are not in order, to take it outside of SA can be tricky. If your tax affairs are in order, it will be easy to get the approvals. Okay, so I'm just seeing what other questions we have here. Okay, so one of the comments, which is correct, is they're talking about the feeder funds. So the rand-denominated investments are fine. You tick the box of diversification and protection against depreciation, but your capital gains will be higher. So that is true if the rand does depreciate. If the rand depreciates, the reverse can be true. So yeah, if your view is in the long term the rand's going to depreciate, then that is correct. And there is a difference. It was actually quite interesting because on Twitter, we had quite a lot of engagement on this topic before the event, and one of the key things people kept bringing up with international was tax, tax, tax. And as you're saying here, in fact, sometimes the international investment outside of SA can become more tax efficient, actually, depending on what happens with the rand. Okay, what other questions are there? So one of the questions actually I see is, are there tax implications with an offshore investment? So how it will actually work is you'll get a tax statement, and when you submit your returns to SARS every year, you will need to include that in your submission to SARS. So similarly, if you have, the feeder fund, you would also get a tax statement, and if there is tax due that year, you would need to incorporate it in your submission. So very similar process. The tax tip I mentioned in the presentation regarding what I called an accumulating fund or a roll-up fund actually means there's no distributions. So most of the Nedgroup funds are accumulating funds, which means if you haven't done any withdrawals, there's actually no annual tax to be added to your submission because there was no income earned. So it actually simplifies that process. Okay, I'm seeing what other questions we have available. So if at any point there's a question, I want to stop. I presume the person's meaning they want to get out of offshore. Then again, you can do a withdrawal if your money has grown, and if it's above the limit, there will potentially be capital gains tax, but you are able to basically disinvest that money and bring it back into South Africa, or you can actually choose to leave it offshore. So let's say, for example, you wanted in an offshore bank account. You could basically disinvest it to the offshore bank account in that relevant currency and leave it there. So if it was a dollar investment, you could leave it offshore in a dollar bank account, or you could bring it back to South Africa. I mean, that's your choice. If it is option one, the feeder fund that you invested in South Africa, you would just disinvest like any other South African fund you're invested in. You would sell out of the units, you would get the money in rands in your bank account. Okay, let's see if there's any more questions. Okay, so I'm just waiting for them to update quickly to see if there's more questions. Okay, so we've answered if it can stop. How can I set up Sorry, it's just busy refreshing. How can I set up high growth and resilient funds outside of South Africa? Was one of the questions. So, I mean, I think this is very tricky to give an answer in a forum like this, because I think different people have different ideas of resilience, and it depends on your time frame. But there are funds, different funds that have different regions. So, for example, you could invest in emerging market funds, which is specific to those countries. That kind of investment is generally more volatile. Some are of the view that in the long term you get higher returns. That's not always the case, but that would be quite a volatile investment. Then you can get investments where you only invest in developing countries, which is considered slightly less volatile. You get investments that have a little bit of everything. So what I mean by that is you have some shares, you have some interest earning investments, it's spread across the whole world. So generally a fund like that will be considered less volatile than investing in a specific region only in shares. So it's quite a detailed topic, and we don't really have time to go into all of it, but I hope that gives you a little bit of info on the types of funds and what's available out there. And again, to that question of diversification, the more those investments are spread across a broader range of countries, the more diversification you'll have, and generally the more resilient that will be across different market conditions. Okay, let's see what other questions there are. So there's a question on, can I invest money if I have a UK bank account? And if I do, can I get the funds paid into my UK account when I withdraw? So yes, so you would go within, in that case, option 2. So you can literally take it from your UK bank accounts and invest it. You won't need to go through the Forex process or the South African Reserve Bank approval process because it's already in the UK. And when you disinvest, you can have it disinvested into your UK bank account. So that actually cuts out some of the steps for you. Okay, I'm just seeing what else there is. Okay, so there's a question on, this is an interesting question on how different are the returns between the feeder fund versus the international fund if they are based on the same underlying investments. So ignoring capital gains tax, now let's assuming you haven't sold any units, the returns converted to rands will be identical, assuming it's the same feeder fund as the international fund. Obviously, if they're two completely different funds, you're going to get different results. But the returns converted to rand should be identical. However, your international investment won't actually be converted to rand, so it's a bit of a notional, because when you see it on your statement, the return you're seeing is a dollar return on your or whatever currency it is in, yen, pounds, whatever that investment is shown in. But it would be that foreign currency return. On your feeder fund, you will see that return in rands. So it can look different on your statement, but when you convert for the currency, the returns will be identical on the two. And that's why I said, if you don't have the need to have the funds outside of South Africa, it might be an option to consider the feeder fund. There are slight tax differences, though, as we discussed. Okay, then one of the other questions is, what options are recommended for investment of funds already offshore? So basically, you have access to almost any and every fund, whether it's Nedgroup or other funds, but effectively, if your money is already offshore, any fund offshore that's in that jurisdiction, that is allowed, you can invest in. So anything really. Okay, so some other questions coming up here. I see, sure. It's a very, very topical subject here. I'm glad it's interactive. Are feeder funds at risk if the government implements prescribed assets for investment funds in the future? So most of what the government has been talking about prescribed assets has been in the retirement fund space. So it's been within pension funds, provident funds, preservation funds, your retirement annuities. And from the feedback we've seen, and I mean, I can't guarantee anything because I obviously don't have say over what the government decides, is that it doesn't sound like prescribed assets is going to be implemented, or at least implemented anytime soon. They have put in place measures to encourage investments in infrastructure, such as asking the trustees to consider investing in infrastructure, but nothing has been forced. So no, the feeder fund is not, in and of itself, there's no prescribed assets that anyone's been speaking about in that context. If you're holding it in a retirement fund, they are trying to encourage infrastructure investments, but there's nothing specified or mandated at this stage. So there's a question, and I'm going to tell you the ones I'm aware of. Which Nedgroup funds are roll-up or accumulating funds? So I can confirm this if you contact our help desk. The only two that I'm aware of that are not roll-up or accumulating funds is the property fund and the multi-asset income fund are the only two that I'm aware of that are not roll-up funds. But once you've determined which fund you are interested in, please just send an email to that help desk that is in the presentation and just confirm with them that the fund you're interested in is a roll-up fund, because we have quite a few funds available. Okay, then there's a question of, is there capital gains tax in Isle of Man? So how it will actually work is when you sell that investment, you have to declare that sale in South Africa, I'm assuming you are tax resident in South Africa, and it would be incorporated as any other capital gains tax would be if you had to sell locally. Okay, so we're going to need to go quickly through the last few because we're running out of time here. For the feeder funds, what is the minimum to start? Okay, so if you are doing a monthly contribution, like a debit order, you can contribute from 500 Rand a month. You don't need an initial lump sum. If, however, you're doing just a lump sum and no regular contributions, the minimum is 10,000 Rand as an initial investment. You can make smaller subsequent investments, but that's to get started. So it's really accessible. I mean, at 500 Rand a month, we've tried to make it accessible to as many people as possible. Okay, so I think I'm going to do the last question, and then we need to wrap up. I know there's a few more left, but yeah, we've run out of time here. Okay, so do we have any intention of offering more passive international funds? It looks here, I think they're asking with a low total cost of investment, and they're comparing this with the offerings from Signia. So we are actually looking at launching potentially, I don't want to speak out of turn because we need to decide, a feeder fund that is passive, but it's an international fund. And yeah, I don't want to speak, so that may or may not come, but the passive fund that we have offshore is the core global fund, and we have that in the feeder version and the international version. And it is very low cost, so that's definitely something you can consider. So I'm going to wrap up now. We have a few more questions, but we've unfortunately run out of time. And please give us some feedback. There is a link at the bottom. We'd love to hear your views. And thank you so much for making this interactive. It makes it a lot more interesting than just sitting here and listening to me talk. So thank you very much.